Talk about some retirement realities. A new report from PwC says that only 36% of Americans feel that their retirement planning is actually on track. And what's worse, a quarter of adults have no retirement savings at all, zero. For more on how to address these issues, I'm joined by Bernadette Geis. She's PwC's U.S. Asset and Wealth Management team leader. Bernadette, thank you very much for joining us today. Let's take us through exactly what your findings were. Just how dire of a situation is it for Americans as they come towards retirement?
Yeah, we've done the studies, and it is getting to be a crisis in this country. We have roughly 45 million Americans that are going to retire in the next 10 years, and the median savings is $120,000, which would equate to $1,000 a month over a 15-year period. So with life expectancies being well beyond 15 years and the rising costs of healthcare and other retirement needs, $1,000 a month simply isn't going to be sufficient.
All right. So Bernadette, we know that there are different costs of living in certain places around the country. But is there a general rule of thumb as to just how much a person, a couple, a family needs to have saved for retirement to make sure that they don't outlive their savings?
Yeah, they really need to embrace the tools that are available because there isn't a simple rule of thumb. Like you said, the combination of how much work people intend to do in retirement, because there's an increasing population that wants to continue to work, how to decumulate their savings over that retirement period, what they will need when is also very different. So what's important is people embrace the tools that are increasingly available for you to estimate your savings need over different periods of your retirement, also based on your expected spending and whether you want to fund your own retirement or those of your children and help them with college education and the like. Those are all factors that need to be considered.
When you look at the aggregate customer client base that you have at PwC for your practice, are there glaring holes? Are there certain commonalities for the biggest places people have the retirement risk, aside from just the fact that they aren't saving enough? Are there certain specific areas, certain specific parts of their financial plan that could use remedying, and how do they do it?
Yeah, it's sort of a set it, forget it. The good news is people are mandatorily opting in to 401k plans when they have access to them, but they're often not evaluating their investment options over different periods of time. And there are amazing products like target date funds, which make the decision making so much easier than 20 years ago when you were meant to allocate your assets yourselves. The low interest rate environment is creating additional headwinds. And so we see asset managers evaluating more creative products to provide access and investment options for real estate and private equity, which, as you read in the papers, have incredible upside and are another means in which people can actively save for retirement despite a low interest rate environment.